Hype stocks. How long do they last and how much have they dropped? Well, today we are going to be looking at the biggest hype stock within the last 3 months of this pandemic. And if you're asking why we're doing this, well, it's because it's fun, okay? It's fun to see these stocks go up and down like a rock. I mean, it's pretty fun. But the other reason is that it shows you guys how volatile these stocks are and why you should not be jumping into the first stock that you see that goes over 100% in one day. So let this be a lesson to you and let this be entertaining to you. So let's go. Okay, so the first stock that we're going to be looking at is Hertz. Okay? Hertz fell down to its lowest point on May 26th, and then it went up to its highest point on June 8th. So from there, it's around almost a 2-week time frame. And if we look at how much it's gained, it has gained about 1,000% from 55 cents to $5.50. Pretty good. Now, how much has it dropped since then? Okay. Well, since then it has dropped around 65% from $5.50 to $2. That's around 65%. Also, an update on Hertz. Yesterday, the stock was halted because the SEC, Security Exchange Commission, they actually paused the stock because Hertz was going to release brand new shares of their stocks that were going to be worthless to a lot more people. So the SEC said, nope, okay, let's stop it and then let's talk about it some more, okay? So they actually decided to not go ahead with that for now. Man, I mean, adding additional shares when your stock is gonna go bankrupt is like a blow to the face for anyone who's buying their stocks. So that's why the SEC stepped in and said, nope, let's talk. So, Hertz is definitely going to go bankrupt, okay? Don't invest in this stock. It's only going to go down. Even if it goes up like this, it only went up for one day, and then it went down, and then down. If you think that Hertz is going to go back to around $2.50 or $3, it might happen, okay? It might happen, who knows? But it's unlikely. Chances are it's just gonna go down. Next is Fanged Network Group. This is a Chinese company that's been around for quite a while. But recently, very recently, it saw its stocks surge from $9.50 to $47, okay? That's pretty much a 500% gain. And the only reason why it happened was because Fanged looks a lot like Fang, like Facebook, Amazon, Netflix, Google, like that acronym, Fang. Yeah, and because of that, in one day it rallied up 500%. And then just as quickly, it dropped like 80% the next day. And since then, since that $47 peak, it has dropped back all the way to $10.70. It was trading at $9.50 before, and now it's $10.70. So it's made quite a lot of gains for anyone who was in it before this spike happens. Yeah, you're made a profit. You probably should have sold at that high point, but and if you think this is hilarious, please give it a thumbs up. It'll help me out a lot. So thank you very much, guys, and let's get back to it. Alright, and the next one is Gnus, okay? Gnus Brand International has been a very popular stock within the last month or so, okay? And this isn't that like one-time spike and then it went down. On May 5th, it was 31 cents, then it went all the way up to $7.90, okay? 2,400% profit. 2,400% profit. And the reason for this huge spike is because they were launching their own kids channel on all the platforms. So they just launched it on Monday, and their shares have been sinking ever since. Mainly because their valuation and their actual revenue and business model does not correlate. If we look at the stats, we can see here that everything's negative. Okay, let's see. Their total cash right now is $2.7 million. Their debt right now is only $6.3 million. So It's not that bad. They're not doing bad. Okay, they work with Stan Lee. They're working with Arnold Schwarzenegger. Really big name brands. The debt here is not a concern for me. The only concern is that the valuation. Okay? Currently, the valuation is at $268 million. The company that only has a revenue of $5 million a year, it is currently being valued at $268 million. I mean, like, you would need like 50 years of revenue just to make up that market cap. At one point, its market cap was $500 million, $500 million. That was when it hit its $7.90. They've also decided to sell extra shares. So, from a financial standpoint, their numbers are fine. Their numbers are fine. Yes, they're not profitable, but they don't have huge debts. Right? Some companies have astronomical debts. They just don't know how to manage their finances, which is crazy stupid if you are going to be running a company that you don't know how to manage your finances. I mean, from the recent surge of the stock price, they could have easily cashed out $7 to $10 million to pay off their debt, which they probably did, because I know that a lot of those executives cash out on their stock options. All right, and the final stock is Urban One. Right, its ticker symbol is UONE, and this one is brand new. Okay, this one just popped 2 days ago. So on June 11th, the stock was worth $1.84. Okay. At its highest point, it was at $27.19. That was at its closing. Okay. At its highest point was $30-something, but the highest closing price was $27.19. And then the next day it dropped to $12. Dropped over 50% the next day. And then the day after that, it went up to $24, 91%, which is today. Today, it went up 91% in one day. If I could buy put options on this stock, I would, but they don't have put options yet. So, yeah, very, very crazy. And the funniest thing is why their stock blew up. So an article from MarketWatch states that the gains come even as the only news from the media company, which primarily targets Black Americans and urban consumers, was a disclosure on Monday. So on Monday, that Bridge Capital Management LP sold its entire 3.9 million shares stake in the Urban One on June 11th. So on June 11th, the Bridgegate Capital Management sold its entire 3.9 million shares of stake. So they probably made $5 million from the share. And because on June 11th, their shares were only worth $1.50. So close to $5 million. So because of that news, this company got a massive media publicity. And especially how this media company is targeting African Americans, and with all the riots going on, that's a big thing right now. So their stock went from $1.50 all the way to $27. All the way to $27. I mean, people at Bridgegate would probably be kicking themselves right now when they sold the 3.9 million shares at $1.50. Instead of, let's not even say $27. Let's just say $10 or $12. They would have made $50 million. Okay? That's a big difference. From $5 million to $50 million. They could have had a lot more. If they wait till today, it would have been like $70 million. But the truth is that's not possible, because it was only because they sold all those shares that this company got so much media coverage. And now they're doing great. This company is doing great. I mean, they're doing great because of the stock, but financially, they are not doing very well. If we look at the statistics, we can see that their revenue, every year is around $430 million, which is pretty good. But their total cash, is only $65 million. Their total debt is $940 million, almost $1 billion in debt. That's like 15 times their cash to debt ratio. Their EBITDA is 167 million. Their cash flow is only 53 million. They have a lot of debt. They have a lot of debt. They've only had this recent success for the last like 3 to 5 days, and so around 5 days ago. Chances are it could still change very, very quickly, so be careful with this. Okay, now the purpose of this video is to show you guys that most of these companies, the hype only lasts for a few days, and then it takes a few weeks for it to trickle down to where it started. But if you buy in just at the top or just a little bit before the top, you're gonna have a very, very hard time making a profit. These stocks cannot keep up their evaluations because they don't have the numbers for it, they don't have the revenues for it, and they don't have the infrastructure to keep up and maintain that valuation. And they just can't. So because of that, they fall down very, very quickly. And let this be a warning to you guys who have put in money in the past or currently. Be careful. Be careful. Unless you really believe in the company and you plan to hold it long term, I would sell it. I would sell it pretty soon. These stocks are not worth your time and they are a huge trap. Alright guys, well that's all I have for you guys today. And if you guys liked the video, please give it a thumbs up. And if you guys haven't done so already, please hit subscribe. I'm trying to hit 1,000 subscribers by the end of August. So let's do it. Let's do it. I think I can do it. Well, thanks for watching and I'll see you guys next time. Bye.